Okay, guys, here's a shocker. Tomorrow, NVDA has earnings. Everybody is so anticipating the earnings of NVDA. They're just basically saying it's going up, it's going down. So many protagonists are sitting there basically guessing what's going to happen. So rather than guessing about what's going to happen, why don't we just put together a real solid plan so that if you're not holding NVDA, what to do? Secondly, if you are holding NVDA, what to do? And then lastly, a couple other stocks that one of them is just a potentially great trade, and the other one is a stock that could move to the upside regardless of what NVDA has to do. Hey, I'm Dennis. Look at first the stock that I think is shaping up into a really great looking entity, and that is PLTR. That's a Palantir. And as you see, Palantir broke out, ran up, and is now putting in just one pretty little flag right back into a level of support. And so we may get a bounce off support down here to move to the upside. What kind of let's go take a look here at PLNTR. And to see how it's doing according to the Investor Business Daily pre-flight, not pre-flight checklist, stock checkup. One, composite rating, 99%. Number one in its industry group, EPS, 96%. Number 18 in its industry group, Datadog is number one. And then relative strength, again, 96, SMR, 8, A, and then accumulation distribution, B+. That means people are buying this one. And it is currently in the industry group. That's the only downside in this industry group, which is develop software for institutions to protect individual privacy and prevent the misuse of information. It's in the middle of the industry groups, and therefore it gets a red. So how do I want to trade this if I want to be jumping on PLTR? Because it's been in the news a lot. A couple of different ways. One, I can do wait for it to get down closer to the breakout area, let's say about the $30 level, put an alert down there and see if it reverses there. Second way of potentially trading this is to just look at the flag, and if we break the flag to the upside, and tomorrow breaking the flag out to the upside would be a break at about $31.10, $31.08. I do want to make sure that I'm above the 8-day moving average, which is about I'll give you a really good number on it. That is 31.33. So I could put in a buy order to buy some at 30. That would be a stop limit order at 31, approximately 35, with a stop loss just immediately below the breakout area, probably down about 29, I'll say 28.84 would be my stop loss on this one. Well, and what about that stock that has a great chance of moving up regardless? In the same industry group as NVDA, and that's ARM. ARM. You may have been following this for quite some time. It's a newer entity, and it's in the process of basing. And as you can see, I've drawn in a trend line here. We break above that trend line, then we've broken structure. That would give us an opportunity to buy it to the upside. Secondly, we may pull back down into this magic fib box here, which what that measures is the move from here to here, and that's approximately the midsection. That is the halfway mark on that pullback. It's above the 200-day moving average, and again, just like I said, consolidating on a low volume consolidation. So we'll watch to see if this breaks to the upside. And it could do that. Look for a break above the, I'd say 137.75 level, which is above the 50-day moving average, which would also take it above the 8-week moving average. And what kind of a move? If we move back up into the past highs, approximately from this level here, how much of a move is that? It's about a 35% move. So that's what makes this very interesting to me. But I'd like to see it break the downside structure to the upside, and or get a little bit deeper in its correction where I could pick it up closer to the 200-day moving average. Now, without any further ado, what about NVDA? NVDA has been, I mean, it's been a beast. I mean, we have to admit that it has been an absolute beast. And I'm going to show you a couple of things on the chart here, but let's first take a look at the stock checkup. Now, stock checkup on this one has a little bit. One is the composite looks great. It's number 2 in its industry group. It's been bouncing between number 1 and number 2 in its industry group for a long time. The industry group itself is at the 60 percentile, so it gets a caution or a yellow flag, yellow light. However, the EPS 99, relative strength 98, SMR A, which if you don't know what those mean, you can go check out Investor Business Daily. Those are all strong ratings. They're in the green. However, we get to the accumulation distribution, and I get a big red E. No, I was going to say a big red A, but it's not that. A big red E. What does that mean? What's the interpretation? That means that more people are selling Nvidia than are buying Nvidia. And so as we've seen that ever since it went into its post-split depression and pulled back very dramatically, what are we in right now? We're kind of in a little bit of a consolidation. So let's see what the heck happens. As I said earlier, if you are in Nvidia, I would if you're not in Nvidia, I wouldn't touch it right now. But I'll give you a couple of ideas on where you might be able to buy it in the next couple of days. There'll be 2 different points. 2, if you are in Nvidia, you need to double check to make sure to see how much profit do you have in your current position. Is it over 10%? The 10% is kind of an interesting number in that normally on earnings, a stock will run between plus or minus 10%, the majority of stock. Now, there are some outliers, and you can go back and you can check NVIDIA. How much has it run after earnings in the past? And it typically stays within that 10% range. Typically, doesn't mean it has to, but it typically. Now, I've highlighted those levels here based on today's close. And based on today's close, as you can see, if it ran up 10% from today's close, that would put me up at 141.13. If it falls 10%, that would put me down at 116.92. I find both of these areas very interesting in that the 116 level, 116, 117 level, corresponds very nicely to the 50-day moving average, where you'd anticipate that would be an ideal place to find some traction and then rebound from there. Could it fall below that? Sure, it could. We could basically, if that fails, then look for it to come all the way down, perhaps retesting this uptrend line. And then that would give us another good bounce. Probably, I would say somewhere between let me give you a number on that, approximately 102 up to about, I would say 107. The flip side of that is what happens if we rally. If it rallies less than 10%, it means it's being impacted by this high right here. How high is that high? I'm glad you asked. It is, there we go. You can't really see that. It's at 140.76, 140.76. So a couple of things. If it rallies, stays below it, watch for a pullback and a sell-off. If it rallies and jumps above it, look for that level to become the new level of support to bounce off of, because we've had a breakout to new blue sky territory. So that's what I'm looking for in NVIDIA. Just drop a note. Tell me what you're thinking about this one. And if you're going to, and let me know, are you going to ride NVIDIA through earnings? Or are you going to take some profits off the table and then wait for the new setup? Okay, guys, I hope you found that interesting. And like I said, just leave a comment on how you're going to play NVIDIA. It may be, I'm not going to do anything. And let me know if PLTR or ARM piqued your interest. So aloha, God bless everybody.